Everyone, and thanks for joining us for our first expert professional series or expert forum series for 2025. Tonight's series is entitled The State of the State of Commercial Real Estate in Rhode Island. We have a panel of four local experts anyway, that are going to be telling you a little bit about what's going on around the state of Rhode Island in the world of commercial real estate. But before we begin, I want to thank you all for tuning in, give you a little update of what's coming up as well. Tomorrow night over in East Greenwich, if you can make it over there, about 5 o'clock at the Sports and Leisure, going to have our little spring fling, just a kind of a opportunity to meet and see some of your fellow realtors in the commercial world that you haven't seen probably since last year's little mixer. Also on the 22nd of this month, there's going to be an RPAC fundraiser at the Narragansett Brewery on the east side of Providence there. So again, hope to see you out there. If you haven't yet made an investment in RPAC, it's something you should probably consider. For a small investment that's obviously going in your name, you can get entrance into the brewery. That's going to be on the 22nd. I believe it's going to be 5 to 7, 5 to 8, and you can certainly hang out there and stay as long as you like. Before we begin tonight, I'd like to thank our sponsors. And these are all year-round sponsors that we have. First is Vantage Builders for, basically all your commercial building needs. All Dry Restoration, Shadone Law, and our newest sponsor this year, Navigant Credit Union. So again, if you have the occasion to need a builder, a restoration company, a law firm, a banking for financing, please try to go to one of our sponsors first and, let them know you're with the Rhode Island Commercial and Appraisal Board and thank them for participating and being a sponsor. All right, we're going to start at the top end of the state today. We're going to start with Mr. Paul Harrison, who is our reigning president of Ricabor this year. And I would like to introduce him. He is the current president. As I said, he works with the Martone Group at Remax Properties, and he has over 15 years of experience in residential and commercial real estate. Today, he's going to give us the update again on the northern section of Rhode Island. And Paul, the floor, as they say, is yours.
Thank you very much, Steve. I appreciate that. The first area I'm going to explore is Burrillville. Jack, can you go to the borough thing? Thank you. Burrillville has a dominant industrial market in northern Rhode Island, anchored by 4 established industrial parks. Industrial space in the town is performing exceptionally well with a high occupancy and minimal availability. Currently, there is only one industrial property for lease listed on LoopNet, 10,000 square foot building at 1155 Victory Highway. This underscores the tight supply and strong demand for industrial spaces in the area. Rents range from $9 to $14 per square foot, depending on building condition, location and condition. The town's industrial base remains active and well occupied. For those looking to build, 4 industrial lots are available for sale in the Burrillville Industrial Park, offering a rare development opportunity in a market with limited inventory. Retail in Burrillville remains stable with growth potential, especially in the village centers of Pasco and Harrisville. Harrisville continues to support a healthy mix of local business, essential services, walkable retail. It remains a steady retail zone with reliable community traffic. Pasco, which has traditionally struggled to maintain retail activity, is showing clear signs of revitalization. There is growing interest from small business and an uptick in activity, driven by local investment and residential growth. Across Burrillville, retail supply is limited and availability is scarce. This creates an appealing environment for business owners and investors. Lease rates in the area typically range from 15 to 23 per square foot, reflecting strong demand and limited competition. Office space in Burrillville is extremely limited, with little to no dedicated inventory currently on the market. The town has historically been a major office destination, has not been a major office destination, and the commercial landscape leans heavily on towards industrial and retail. As a result, business seeking office space often face limited options within town limits. Burrillville's strength clearly lies in its industrial and retail sectors, which continue to outperform the majority of commercial activity in the area. Next, please, Jack. Forster-Gloucester. The Forster-Gloucester region, located in northwest Rhode Island, is predominantly residential in nature with limited commercial inventory. Commercial real estate activity is modest, but certain sectors show strategic potential, particularly in Gloucester's retail market and select commercial zone land opportunities near the Connecticut border. A 63-acre commercial zone parcel is currently available for sale near the Connecticut state line, offering long-term development potential in a lightly built-out area. A commercial auto repair facility is also available for lease, representing one of the few existing commercial use structures in the market. Gloucester is home to one of the region's largest corporate campuses, the FM Global Research Campus, located in West Gloucester. The 1,600-acre facility serves as a major institutional and employment anchor. While not open to the public, FM Global's presence contributes significantly to the town's economic stability and infrastructure development. Retail activity is strongest in Chepachet, historic village in Gloucester with a thriving small business district. The area supports a healthy mix of local retails, restaurants, and service-based businesses. Despite the town's overall rural character, Chepachet retail sector is active, with strong consumer traffic and a limited number of available spaces. Retail lease rates average between 17 and 24 per square foot, reflected solid demand and limited supply. The combination of low availability and steady business actively positions Chepachet as a strong retail submarket within Gloucester. The Forster-Gloucester office space is a rare commodity. Currently, there is not any office space available. Next, please, Jack. As like Gloucester, Scituate. Scituate is a neighboring town, is largely residential with limited industry inventories. However, certain sectors are showing signs of stability, and particularly retail, while industrial properties remain scarce. Scituate has a minimal industrial presence with very little inventory for lease or sale. However, two notable properties have recently been listed. There's land for sale. It's a small parcel with 4,800 square feet available for development or industrial use. Light industrial property, a light industrial site located near the Smithfield line, offering potential for small-scale operations or light manufacturing. Overall, Scituate's industrial market remains a niche, and available properties are limited. Retail in Scituate remains strong, particularly in the North Scituate Village area. While storefronts are filled and business activity is steady, the area benefits from its mix of local services, restaurants, community-driven retail. Additionally, there is a limited retail availability along the Johnston line, offering small opportunities for retail looking to establish a presence in Scituate's growing retail market. Retail lease rates typically range from 17 to 23 per square foot, reflecting strong demand and limited space in the market. Office space, once again, in Scituate is limited. It's similar to Forster-Gloucester. Currently, there is not any office space available in Scituate. Next, please, Jack. Johnston. Johnston continues to offer a range of small format commercial and industrial opportunities, with demand remaining relatively stable across most sectors. The market is characterized by concentrated or contractor units, active retail leasing, and limited industrial inventory. While office absorption rate remains flat, retail activity shows positive momentum. The top properties for sale in Johnston are largely commercial land parcels concentrated along Plainfield Pike. A cluster of 9 garage units averaging 1,250 square feet are actively listed on the MLS, LoopNet, and Crexi. These units are trading around the $290,000 per unit. Industrial lease rates generally range from $9 to $12 per square foot, with brand new contractor units leasing closer to $21 per square foot. Overall, industrial availability is limited. Market activity reflects tight supply with moderate demand. Johnston's office inventory is mostly Class C space with very limited new development. Lease rates average between 14 and 18 per square. The absorption rate in the office sector is flat to negative, indicating minimal demand and limited movement in the market. Retail leasing in Johnston is active, with positive absorption rates, indicating a healthy and growing sector. Lease typically range from $15 to $20 per square foot, with demand focused on smaller, well-located strip centers and standalone sites. Retail sales cap rates are averaging right around the 7 to 8% reflecting stable investor interest and solid tenant performance. Next, please, Jack. North Providence. North Providence offers a stable and resilient commercial real estate market, led by a strong industrial occupancy, steady retail activity, and a modest office sector. While the town does not see high transaction volume, availability inventory is limited, particularly in industrial spaces. Industrial space in North Providence remains high. There is very little available inventory listed across major platforms. On-the-ground observation shows that most industrial properties are fully occupied, reflecting a strong fundamentals and tight supply. With low turnover and limited new development, North Providence industrial market remains consistently stable. Retail in North Providence is performing well, though not quite as active as in some nearby towns. There is a moderate level of availability in both retail leases and sales. Lease rates generally fall between the 15 and 24 per square foot, depending on location, condition, and visibility. The absorption rate is flat with a slightly positive trend, suggesting stable tenant demand and gradual growth. Office space in North Providence primarily consists of Class B and C properties with limited high-end inventory. Leasing prices average $16 to $20 per square foot. Current inventory includes 4 office buildings for sale and 6 office units for lease. The market remains relatively quiet with steady, modest movement in leasing and sales. Next, please. Smithfield. Smithfield continues to be a strong and diversified commercial market in northern Rhode Island with healthy industry demands, steady retail activity, and ongoing development momentum along key corridors, anchored by major employees such as Fidelity, Bryant College, and an active industrial base. The town benefits from both institutional and presence in small business vitality. Smithfield is home to 4 established industrial parks and remains a core market for industrial and contractor space. The Route 116 corridor, George Washington Highway, is a key growth area with new commercial, hospitality, and warehouse development underway, including a planned 1 million square foot facility. The area is supported by Economic Growth Overlay Zone, which allows for flexible commercial development. Larger industrial spaces are typically leased in the $6 to $10 range. Light industrial contractor units remain in high demand with increased development in these spaces in recent years. A new contractor unit lease, they're averaging 18 to 24 per square foot, and sales for these units are around $350,000 for a 1,250 square foot unit. Retail in Smithfield remains resilient and well occupied. Smithfield Commons, one of the town's major retail centers, has only 1 vacant unit, a strong indicator of demand. Most local retail storefronts, including small-scale mom-and-pop spaces, are fully leased. Lease rates average right around 17 to 24 per square foot, depending on location. The office sector in Smithfield is currently stagnant. Larger office spaces have lingered on the market with both leasing and sales activity showing declining trends. Most inventory in Class B and C space, with leases ranging from $14 to $20 per square foot. Overall, office demand remains soft and new leasing activity is limited. Next, please. North Smithfield. While North Smithfield is primarily a residential community, it does support a select inventory of industrial, retail, and office properties, with proximity to Route 146 serving as a key driver of commercial activity. The town offers limited targeted opportunities in industrial and retail sectors, with the office market remaining relatively quiet. North Smithfield has a modest but significant industrial presence, particularly near Route 146, where larger buildings are clustered. As for current listings, there is approximately 203,800 square feet of industrial space available for lease. Lease rates for these larger industrial spaces range between $7 and $10 per square foot, depending on building size, condition, and access. The market is generally stable, with demand focused on distribution and light manufacturing needs. Retail in North Smithfield appears strong, with limited availability across most corridors. Spaces that do come up for lease tend to fit quickly, especially in high-traffic retail zones. Lease rates vary from 15 to 27 per square foot, depending on location and tenant mix. The office sector consists of mostly Class B and C buildings with limited new development or renovation. Leasing prices spans a wide range from $10 to $26 per square foot. depending on space, quality, and location. Office properties are seeing a slower absorption, with spaces sitting on the market longer than industrial or retail. Demand is soft, especially for larger or less updated office spaces. Next, please. Cumberland. Cumberland offers a diverse mix of commercial properties with particularly strong base in industrial and office inventory, as well as a notable amount of retail space currently on the market. Its location and access to transit corridors make it attractive for users across multiple sectors. Industrial space in Cumberland remains largely occupied with limited availability across major platforms. Current listings show larger industrial spaces leasing in the $8 to $10 square foot range, while smaller industrial units are asking closer to $12 per square foot. The low vacancy environment highlights strong demand and limited turnover, especially in the core industrial areas. Retail availability in Cumberland is higher than the surrounding towns, with the widest selection of retail spaces currently for lease in northern Rhode Island. Lease rates range from $15 to $28, depending on visibility, location, and condition. Retail properties for sale are limited, with 2 active listings on LoopNet and 1 mixed-use property on Crexy. Cumberland has a concentration of Class B and C office space, with more office space availability than any other nearby town. Leasing prices range from $16 to $22 per square foot. Office condo units for sale are typically priced around $225,000 for a 1,250 square foot, reflecting modest demand in sales pricing. The office market remains active but slow moving, with users showing a selective interest. Next, please. Finally, we have Woonsocket. Woonsocket remains an active and mixed commercial market in northern Rhode Island, with stable industrial performance, a large inventory of retail and mixed-use properties for sale, and limited office space activity. The industrial sector in Woonsocket is performing well, with limited availability across commercial listing platforms. Leasing prices vary by size and condition, ranging from $4 to $12 per square foot. Demands remain healthy and vacancy is low, particularly for flexible industrial spaces. Woonsocket currently has the highest number of retail properties for sale among northern Rhode Island towns. The city also leads in the number of mixed-use properties on the market, offering opportunities for investors seeking income-producing real estate with residential and commercial components. Retail lease rates range from $15 to $25 per square foot, depending on location and visibility. Office space is limited in Woonsocket, with only a handful of listings available for lease or sale. Most inventory falls into the Class C category, with an average lease rates of $12 to $15 per square foot. The low availability rate suggests demand on a small inventory base rather than a saturated market. Next, please. The Northern Rhode Island commercial real estate market summary. Commercial real estate landscape in Northern Rhode Island remains strong and active, with industrial and retail sectors leading in both demand and performance. Industrial properties across the region show low vacancy rates, particularly key highway and industrial corridors. Retail leasing remains solid, with limited availability in several towns and consistent demand from small businesses and national tenants. In some towns, underutilized office buildings are being repurposed, residential units reflecting a broader shift in demand. Office space continues to sit on the market longer, particularly Class B, C inventory. The residential real estate market and the commercial end is in high demand across northern Rhode Island, which continues to support mixed use and redevelopment opportunities. Starting to see where the rental for residential rentals is starting to stabilize, after years of upward pressure. There was a noticeable trend of new light industrial contractor condo units being developed throughout the region. These units are meeting demand from local trades and small businesses looking for ownership opportunities and flexible commercial space. And I want to thank everyone for listening to my presentation. Thank you.
Thank you very much, Paul. And we're going to be moving on to Providence. But before we go there for just a second, I wanted to let everybody know, if you have any questions about any of the presentations tonight, feel free to throw them in the chat feature at the bottom or the top of your screen, and we'll try and get answers to your questions if you have any. Myself and Jack will be monitoring that. Also, I just wanted to remind you too, the reason we're doing this professional series and the CE throughout the year is as a benefit of your membership here at the Rhode Island Commercial and Appraisal Board. You can get all of your continuing credit uh, hours as part of your membership. So we're going to try and make sure we roll out at least 12 credits each year. That's 24 for renewal. And this credit tonight is, this class tonight or this presentation is worth 1 credit. So moving on to Providence now, Robert Fox, who is our president-elect of the Rhode Island Commercial and Appraisal Board. Rob works with NAI Advisors, focusing on commercial sales and leasing, and brings over 5 years of industry experience with him. So today he's here to share what's going on in Providence County. Rob, it's all yours.
All righty. So I did a pretty broad overview. I went through statistics, so I'm going to read through them and I'll add in as I go. So for Providence, currently there's 2,200 units available. At the time that I made this, I'm sure that there's more at this point. The vacancy rate for this is all multifamily. Vacancy rate is currently 3.5%. The average rents, as we all know, have skyrocketed. According to CoStar right now, or Zillow, 1 beds are going for $20,33. 2 beds are going for an average of $2,800. 3 beds could go up to $3,000 and above. And the average sales price right now is $171 a unit, which was absolutely staggering to see. I've been a little bit out of the multifamily game this past year, so it's a little mind-blowing to me. Moving on to retail, the current inventory on the market holds at $103 million with a 2.9% vacancy rate. The current asking rent on average across the board based on the data online is about 1944 square foot. The average, the market sales price is around 169 a square foot, which is the numbers have they've gone up quite a lot over the last couple of years. And the average cap rate is about a 7.5, depending on the type of property that you're looking at. I know a lot of the triple net stuff is selling at 7 caps, some 6 caps. The retail market's definitely interesting currently in Providence. Office, I stuck with some Class A. Class A office inventory is high. It's almost $61 million. We've got 200, let's see. There's about $292,000 worth of inventory that's under contract. There's a 5.8% vacancy rate currently for office, which I think anyone that does a lot of commercial in Providence knows that a lot of offices are not moving. They're sitting, even at low rates. They're still pretty stagnant. The average asking rent for office is 23.33 square foot. I'm seeing it all over the place. I mean, it really depends on if it's mom and pop, if it's a big conglomerate, but that according to CoStar data, we're about 23 a square foot. And the average market sales price is 120 a square foot. But we're not seeing too much office move right now. Going on to the next slide. So I went with notable sales just because I didn't even know about a lot of these sales, and I think they're worth mentioning. So for office, 150 Washington Street, Providence, sold for $15 million, $250 a square foot, and so it was a 60,000 square foot building. 825 North Main Street sold for $7.9. 155 Chestnut Street in Providence sold for $4.7. Crazy numbers, but there's not too many sales that are notable in the office end of things. Retail, we had a couple pretty good ones. 550 Hartford Ave, that went for 4.7. That was a 7.6 cap, almost 7.5 cap. 295 Academy Ave in Providence, that sold for 4.3 million at 320 a square foot. It sold at a 6 cap. And 60 Ship Street, there was no cap rate that was given for this one, but it sold for 3.3 million, which is 714 per square foot. Very high. As far as multifamily, we're seeing a lot of multifamilies move. We're seeing a lot of multifamilies that are selling up above 100 a door, almost minimum at this point. I'm seeing a lot that are coming across my desk at like 120, 150, 200 a door. 18 Spruce Street sold for 238 a unit. That was 49 units. 99 Rugby Street, 8 million at 123 a unit for 65 units. and 1117 Douglas Ave sold for $3.5 million, which was 34,000 a unit, 102 units. But we're seeing it's definitely interesting if you've been in this game for a while. I've been in it for 5 years, and when I started, the average price was probably 75 to 80 a door. To be at this point, it makes me want to go after a little more multifamily. But the overall market in Providence is definitely slow, and we're seeing that across the board on everything. I've got a little bit of office, I have a little bit of retail, a little bit of multifamily, and the calls have definitely slowed down. But I definitely think the market's going to start making a pretty good shift sooner than later. And Joe, I did miss out on the industrial data on this. I see your message here. Industrial in Providence is moving though. I know a lot of people, a couple guys on my team have things in Providence, and they're moving. I threw in, if we go back to the last slide, I threw in the I-95 district. We all know about that. They're doing a lot right now. I live in a building that's within it, and quite a bit of projects are on the chopping block right now. So there's parcel 25. So yeah, we've got about 1, 2, 3, 4, 5, 6, 7 projects currently. I know the city is still taking in some, but a lot of them are multi-use properties. So they're really shooting for a lot of mixed use development around here, because we want to keep the commercial, we want to have the residential, we want to kind of have best of both worlds. But yeah, so there's parcel 25, life sciences. That's going to be 208,000 square feet. That looks like that's more in the city end of things. Parcels 14 and 15, those are going to be multi-use. Richmond Street and Ship Street, you got another 300,000 square foot lab that's going to be coming here. It's going to be great. Parcel 9 and parcel 2, both multifamily. It's going to be adding 130 units, 194. It's great. And then parcel 8 is another multifamily. Yeah, so we've got a lot of growth coming to Providence. I think there's a lot of people that are fighting this I-95 district development. There's a lot of good ideas on the block. There's a lot of bad ideas. But overall, the market is a little bit slow, and but it's moving. Sorry, we're moving. We're getting there, and I think this next year is going to be a good one for Providence.
All right, thank you very much, Rob, and Joe. Thanks for using the chat feature there. One other thing I wanted to remind you, because we seem to have quite a few people on board tonight here, is our next series is going to be next Wednesday night, and that's going to be appraisal partnership in the process. Vanessa Mann's going to be doing that on commercial appraisal, so make sure you sign up for that for next Wednesday. That's going to be May 21st, obviously, same time, 4 o'clock. Also, next, we're going to move down to Washington, or excuse me, to Providence, to wherever the hell we're going, Kent County. And got Jeff Butler, who been in the business for, what now, 150, 60 years, I think. Now, 48 years, Jeff's been in the business here, specializing in residential, commercial, and investment properties. And he's going to give us an update as soon as he unmutes himself as to what's going on in Kent County. Take it away, Jeff.
Okay, there we go. Can you hear me now?
Got it.
All right. So I was asked to do Kent County commercial market. And I guess Washington County would follow closely to it. This is all data from CoStar. And you got to bear in mind that they don't have all the data all the time. It's a wide range of products here, A space, B space, C space. So it's all kind of composite thrown together. And sometimes it's skewed by larger transactions. So in each sub-market, I've broken down office, retail, industrial, and flex space. And I've done an overview, something on the rental rate. Jack, go to the next slide. So it'll be the overview on each one, then the rental rate, the vacancy rate, and the sales. But this, the first graph in each, the overview tells quite a bit of how much space is out there what the vacancy rate is, 7.4%. The asking rent, 22.22 average for office space, and a 10.7% cap. Interesting. They're also showing 113 a square foot for sales. Not so sure. Again, I think that this being skewed by some of the larger sales that are out there. Next slide, Jack. So this goes back, if you look at the bottom, each graph's going to be the same, back 10 years to 2015, and then forward 3 years to 2029. But you see, we've consistently been going up. 2024, a little bit of a dip, kind of a quiet year for office space, but the trend is upward from here through the next couple of years, barring any major market corrections or interest rate hikes or anything like that. Go on to vacancy next. Office vacancy was actually down in 2024. They're saying it's going to go up a little bit. So it was down to 6.5%. They say it's going to go up to a little under 7.5% on vacancy. So things will be sitting a little bit longer. And then the trend looks like they're trending, forecasting it to be flat from there. Time will tell. Next slide. So this is the office sales. So along the bottom is sales volume, dollar amount, and then the price per square foot. You can see we've recovered from the pre and post COVID days, and the per square foot sales quite a bit up there. It was actually peaked, I think, from pent up demand in 2021, and is down a little bit now, but the trend is supposed to be going up from there. I think it's important to note that we're in a little bit of a trough with most of the product lines we're talking about. So down for 24, a little bit down for 25, but projection for 26 through 30 is very good. Next slide, Jack. So next is the retail overview. Shows not much under construction. Absorption rate was pretty good. Vacancy rate is really low, which is good. I was kind of surprised by that. Asking price market rent is $19.62 a square foot. Sales average is $153 a square foot, and a cap rate at 7.7%. But again, recognize it's a wide range from small retail to the malls, So next slide. Again, the trend has been up for the last 10 years, down a little bit through the end of 24 and maybe through the first part of this year. And the trend looks upward from there in terms of square foot rate, ask rents. Next slide, Jack. Vacancy rate, we're really up there. 5% during 20 and 21. Down a little bit right now. We're just below 3%. They say vacancy is going to go up a little bit from there. And then again, looks like it's just going to even out is what their forecast is. Next, Jack. Interesting. This shows that, again, sales volume in terms of dollars down below. And then with the ask price, they've been actually sales, not ask price, but sales price trending upward. Came down a little bit in 23, up a little bit in 24, and they're going to show a little bit of a dip and then up again. So I think there's opportunity here in the trough in terms of sales. If you're looking to, someone's going to buy something in 25, it's probably a good time, as it looks like it's upward trend from there. On to the next one. So the industrial, I broke down industrial and flex space because it's kind of two different products in Kent County and Washington County, for that matter. There's inventory is pretty strong. There's a lot of space out there. It's renting up pretty quickly at about $11.69 a square foot on the average. We've seen a low of probably $8 a square foot, but again, it's averaging out. 5.4% vacancy. Market sales price, $82. That's about right. We've done a couple of deals on larger buildings that were right in that ballpark. Cap rate sounds about right, 8.6%. But if you want to keep these slides, I mean, you can study, what's going on with availability and different trends they're showing here in the overview slide. Well, feel free to give me a call. Be happy to walk you through it. Next slide, Jack. So on the industrial ask per square foot has been going consistently upward. Going back, 10 years ago, we're getting $6 a foot. Now we're at $12 a foot, and it's likely to keep on going up from there. And it's supply and demand. They're not building anything new. So what's out there is renting at a pretty good rate. Vacancy rate is pretty low. So again, the trend is more for industrial. It's an upward trend that we're going to see $14 a square foot or better. Again, larger buildings will be less money. Smaller buildings, generally more money per square foot. Next slide, Jack. Vacancy rate. It dipped really low in 22. I think, again, it was just, taking care of the inventory, pent up demand. Spiked again in 23 and down again. We're around 5% vacancy right now. They're saying, again, it's going to go up a little bit in 25 for the balance of this year and then peak, and then vacancy will come down, which is a good thing. Next slide. So again, we're showing sales volume at the bottom, price per square foot in the blue. 10 years ago, you could buy something at probably $35 a square foot. Now you're up to about $83 a square foot. And again, because there's not much supply and there's still a good demand, the trend is still upward for the next couple of years and foreseeable future. Next slide, Jack. So the flex space is, the light industrial contractor space. Everybody's talked about the 1,200, 1,500 square foot units. That's the hot stuff right now. And we've done a lot of it in Kent County and South County. I'd say, South County probably is going to be a little bit stronger in terms of ask rents and ask prices, and a little bit lower in vacancy just because there's not a lot of space out there. But Kent County is where most of your space is. Vacancy rate about 4.1%. We've done probably 30 leases in the last 18 months on these small contractor space, and we're getting $15 a square foot or better. They're talking about 109 per square foot for sale price. They're barely building those for that amount of money right now. So we're talking probably I'd say 225 to 275 per square foot. So that's going to really skew the number up quite a bit. I don't think they have all the data here. Cap rate of 9.1%. Next slide, Jack. Next slide. So this shows the, again, the upward trend in rents, which are really, they're probably exceeding $15 a square foot now and likely to go up more. Going back a few years ago, retail and office were, getting $12 a square foot, and we're, renting this stuff at $8, $9 a square foot. Now where the flex space is overtaking, the B office space and C office space. And again, the trend is upward. Shows a little bit of a downward trend at the end of 24, but trending upward from here. Next, Jack. Vacancy, it was really low. There was no inventory in 22 and 23. And then they started to rebuild again. It took a while to get product in. So vacancy went down in 24. I don't see the vacancy going back up. They're projecting that it will. We're filling everything we have, and we've got people waiting on new space that's being built. So I don't see the vacancy going up that much. Next slide. Sales volume. Again, you could build these things pretty cheap going back 10 years ago. Right now, they're building them for about $100 a square foot. So they're selling for much more than that. So your 1,250 square foot unit's probably going to be selling for around 250 now. And the trend is continuing up from there. They're showing flat sales in 24. I just don't think they have a lot of data there. I'm not sure why that shows like that. But we have right now probably another, well, 15,000 being built that they're not even showing on this in Kent County out in West Greenwich, running Route 3 there. Next slide, Jack. So that's kind of the quick overview. I figured the picture's worth 1,000 words. But the summary is, with prices trending upward and vacancy trending downward, looks like a pretty stable market through this election cycle, if no other major market or interest rate upsets. Retail and office still lagging. The industrial, warehouse, and flex markets due largely to online shopping and people working from home and Zoom meetings. New contractor units rents exceeding the B retail and office with rates of $15 to $16 a square foot net of utilities, and that's likely to go higher as is cost to build them are going higher. That's almost doubled in the last 5 years. Actually, 4 years ago they were telling me around $80 a foot. Now they're telling me about $125 to $150 a square foot to build those contractor units. It's likely to go up more, which makes it difficult for new facilities to be built, and for small businesses to get into them. However, business and individuals still need storage and trade workspace, manufacturing space, and most today are opting for leasing due to the rising prices and difficulty in getting financing for a small business. So a strong market for this product still. And that's about it for me. Thank you very much, Rob and Paul. Prior to that, good information. Hopefully you got some good information out of this.
Thanks very much. Thanks, Jeff. And as I maybe didn't mention earlier, this session is going to be recorded and we'll post it up on the website later. So if anybody wants to review those slides or get any of that information and pass it on to people in their offices or to any of their clients as well, that would be great. Also, while I've got everybody on here still, before we let them get to our last speaker, I just want to remind you our commercial day this year is going to be November 6th. Commercial day. We've got a great few topics we're going to be putting out to all the membership here. One in particular that seems to have a lot of information and a lot of I guess focus this year is AI. So we're going to be working on that. Jeff, did you have something else? I'm sorry, you were still.
Well, the only thing I wanted to mention is that I recently got my Florida license, so I'm working kind of the Treasure Coast from let's say Cape Canaveral down to Vero Beach and Stewart, and working mostly investment properties, some industrial stuff, and maybe some land. So in the Treasure Coast, which is the East Coast, Cocoa Beach area, Vero Beach area, let me know. Flying in and out of Providence to Vero is about a 3-hour flight now, and it's probably $250 if that. So
if anybody's got any referrals down for Florida there, let's send them Jeff's way. Last speaker to round out tonight from our across the pond is going to be Molly Kirby, representing Newport County, Aquidneck Islands, and she's a principal broker at Kirby and Kirby. She's been working in commercial real estate for over 8 years now, focusing on commercial properties and investment. And today she is going to share the update on what's happening overseas, as they say, in Newport County. Molly, take it away.
Great. Thank you, Steve. All right. Next slide. I'm going to give you just a kind of high level overview of the different markets. Just like last year, I didn't really make my slides with too much data. I'll just give you high level. So office market, the small office market remains really strong. People are continuing to look for space to work that's outside of their homes. So that's mostly fueled by either local entrepreneurs or people who, maybe their head office is in Boston and they just want a small place to work here. There's a very clear preference for private offices over collaborative workspaces, which is interesting. I think we saw that kind of collaborative workspace fall during COVID. but just seeing projects like Innovate Newport, where we kind of thought co-working was going to be the new thing, it's just not. So, and then one other thing to note, and this will kind of, I'll continue with this when the next slide is, you know, the small office market is really, really strong. And when we have larger vacancies, we're suggesting our clients find ways to make the spaces smaller just because and make it into maybe 3 suites, just because there are just more people looking for those small offices. So a couple things. So what was at the end of the other slide is that we have had some really interesting larger vacancies this year in the defense industry, specifically in Corporate One and in the industrial park. I can think of 4 larger companies that lost funding just about overnight and just kind of pack up and leave. That will be an interesting things to continue to watch. But again, our strategy with these building owners is how do we make these spaces smaller, because we're going to be way more successful in cutting them up. So one thing that's interesting is, and we talked about this last year about the density change that the state put out to, basically the new regulations that increase density allowance and modified parking requirements. Everyone is really excited about this. I think we're kind of in like a watching phase. I haven't actually seen someone do it. Well, I've seen one person do it on Aquidneck Ave, but a smaller project. I think that there's a lot of excitement around this to battle larger vacancies, but just the cost of construction, I think, has just been people's biggest roadblock. So it sounds nice, but the cost to convert is just too much right now. Next slide. Okay, so the retail market, probably what I said exactly last year. There's just historically low vacancy rates in both the tourist area, so Thames Street, and also community center type places like the shopping plazas in Middletown. If you were to call me today and say, I want to open a store in Newport, I have one vacancy, and it's up in the plaza on Bellevue. It's very expensive, but there's just one. The overall temperature from retailers is that staffing is still their largest hurdle, but sales support their decision to continue to renew their lease contracts. Some interesting kind of big box shifts that have happened since the beginning of this, actually, no, end of last year and the beginning of this year. The Christmas tree shop in Middletown, that was a huge vacancy. That was leased by Brown Health Primary Care. GameStop went out of business in Middletown, and that was leased by a Pilates studio. And then the Bed Bath and Beyond big space in Middletown was leased by actually Home Goods. So one project to note that will be really interesting, because because we've had such limited retail spaces, it's really hard to get a grasp on on the real demand, because there's not much to talk about. But there is a new mixed use development project that we're working on. It's called Rosebrook Commons. That's on West Main Road in Middletown. It's a mix of 160 apartments with commercial units on the first floor. It's 20,000 square feet of commercial and up to 12 units. So some of the units can be bigger. So that will be a really interesting project to watch this year. Completion is slated for June of 2026. But that's been pretty slow as far as inquiries. However, inquiries are typically pretty slow when until people can actually see things actually happening on the site. So next slide. So hospitality, and I'll be quick with this. So there was we don't really have any data from this season yet, because obviously it's just the beginning of the season. one thing that's been really interesting about investment properties, specifically in the short-term rental market, is that in January 1 of 2024, the city changed regulations so that you can only have a short-term rental in a limited or general business zone. It used to be allowed in residential areas. So what happened is all these people who bought these homes as investment properties to do short-term rentals in Newport, they can no longer do it. So what happened is last year, they decided to do a summer-winter schedule, and did inflated summer and then, salve rentals in the winter. And there was a ton of inventory for summer rentals last summer. So tons of houses were empty. So this is going to be the second cycle, and I'm already seeing that same level of vacancy because, they're trying to match what they were previously making on VBRO and Airbnb and, asking $30,000 a month. So that's going to be really interesting to see what these people who bought these properties as investments decide to do, whether it be to convert to a year-round model and just kind of accept that this is what it is, or to sell their investment property. So that will be very interesting. And quite frankly, the city's decision to do this was to create more housing, and it worked. It's not great for people's investments, but it's certainly opened up housing. So it's good and bad. So next slide. Industrial market. So kind of like what Jeff was saying, 2 years ago, I couldn't find a tradesman building, tradesman unit for someone to lease. They were, through COVID, we've kind of been proven that, the trades fare well in, economic downturns and pandemics. And so that I would have said was our strongest market 2 years ago. Investors took notice, and there might be actually too much new inventory. So a couple and inventory that has come up in the last year. So just a couple addresses here. You have 2949 East Main Road, which is a 9,000 square foot tradesman building that is fully leased. 165 Oliphant Lane, 16,000 square foot, that is fully leased. But the two that have me a little concerned about the industrial market is Tupelo Cove, which is a 16-unit condo conversion, and then Coddington Cove, which is currently under construction, and that is going to be sold as industrial condos, tradesman condos, 56,000 square feet total. So, people can decide how big they want to purchase them, but there's a lot of inventory really quickly in a concentrated area. I just don't know if there's enough demand to satisfy the amount of units that we will have. Next slide. Investment market. There's just been few investment sales. A majority of the recent sales are for end user acquisition for personal operational needs, or properties that have a development potential. I'd say across the board, the cap rate expectations are 7%. We have 2 plazas under contract now, one at below 7, which was shocking, I think it's at 6.75, and then one in Middletown at just about 7. Obviously the elevated interest rate environment affects that. But again, the owner operator purchases are still strong. And we have a lot of clients who are purchasing through the SBA 504 programs. And I think that's it. Next slide. That might be the last one. Yep, that's it.
Hey, Molly, you had one question from somebody there wanting to know how is Innovate Newport faring with the change in demand for hybrid models?
That'd be for Molly, right?
Sorry,
Yeah,
I didn't
was
hear
for
that question.
Oh, I'm sorry, Molly, you had a question. How is Innovate Newport faring with the change in demand for hybrid work models?
So they've actually done exactly what I mentioned before, is that they actually ended up creating actual office spaces with doors, like proper offices.
So they're doing well?
They're doing fine.
Great.
They're
Great.
doing fine. So they're full. That's good. They're full. I think the projections were for people to have these, they called them hot desks. So you pay a monthly fee to be in a desk with a bunch of other people in the room. I think that they were expecting to yield higher with that model, but having closed doors, now the building's full.
Great. Well, listen, anybody who's still on board here, feel free to unmute yourself if you have a question you'd like to ask. I do want to remind everybody, though, first I want to say thank you for not only our speakers, Paul, Rob, Jeff, and Molly. Thank you for Jack for putting this whole thing together for us as well. But I do want to remind you that your certificates for credit, your CE credit certificates, will be emailed out to you before the end of the week. Don't forget, we have another series next Wednesday, and we're hopefully going to have 3 or 4 more throughout the year, and even a 3-credit class offering maybe in December at some time. Again, I want to thank our sponsors, as always, Navigant Credit Union, Shadone Law, All Dry, and Vantage Builders. Again, if you have the opportunity to use any of them, let them know you're with Ricobor, and that's how you came to call on them. Does anybody have any questions? I see a couple of things popping up here. Looks like Jeff, you want to ask that live? Go ahead.
Asked and answered. What's the lease rate for contract units in Newport County? And Molly says 15 to 17, which is just a little bit higher than Kent County. And Washington County, I expect, would be the same thing. Somebody asked about Washington County. They're going to follow the same trends as Kent County, maybe just slightly higher in rental rates and sale rates.
All right. Are there any other questions? Like I said, feel free to unmute yourself. You don't have to go to the chat at this point if you'd like to just shout it out. I do want to be mindful for everybody too. We are at the hour mark, so you have put in your due penance here for your credit hour. But again, want to remind you tomorrow night, if you're in the East Greenwich area around 5-ish, stop by Sports and Leisure. And on the 22nd, if you're in Providence, stop by the Narragansett Brewery for the RPAC fundraiser and learn a little bit about what RPAC is doing for you and for our industry, because we got a lot of great wins coming out of Washington right now. So again, if there are no further questions, Jack, do you have anything to add here?
I don't. Outstanding job, MC, Mike. Stephen, thank you very much.
All right. If there are no further questions, again, Jeff, Paul, Rob, Molly, thank you. Thank you for a great presentation and for kicking off our first expert series in class and style. So thank you very much. And hopefully we'll see everybody here next Wednesday for the next series. And that's going to be on appraisals.
Thank you to the speakers. Thank you, Jack.
Thank you, everyone.
Thank you, Steve. Take care.
All right.
Have a
Have a
good
good
night.
evening. Take
Thank
care.
you, everyone.
Ready.